Let me now bring on board billionaire investor and author Jim Rogers, chairman of Roger Holding, joins us live from Singapore. Mr. Rogers, good morning. Always a delight to have you back on ETNOW.
I am delighted to be here, Coach.
Mr. Rogers, are you a bit surprised with the U.S. economic data? If I look at the tone of U.S. economic data, off late things are looking upbeat for the U.S. economy.
Coach, you have to remember two things. There's an election in America in November, so you're going to see a lot of good news announced. Whether it's true or not, who knows? Plus, of course, you have the American government spending staggering amounts of money right now and printing a lot of money, getting ready for the election. This happens every 4 years in America. They do their best to get the economy juiced up so they can win the election.
Jim, hi, morning. We've got the ECB president come out and say, the debt crisis strategy working as ECB postpones Armageddon. What does this mean for commodity prices, which were in a downtrend as the euro crisis loomed, all of last year?
Well, commodity prices have not been in a downtrend. They may have been in a short-term downtrend, but long-term, secularly, commodity prices are still in a major uptrend, and that's going to continue. Yes, they have postponed Armageddon. I'm glad you put it that way. Nothing more. We've discussed before here that 2013 and 2014 are what I'm most worried about, because this year everybody's trying to just get through the next election. There are 40 elections in 2012, Aisha. Everybody's going to do their best to get us through the election. Watch out for 2013.
So for 2012, Mr. Rogers, do you expect that since there are 40 elections, central bankers, they will continue to print money, and they will print more money, and they will print more money that will automatically, spike commodity prices up?
Yes, Nikhil. Also, as we discussed before, I think I told you that if the world economy gets better, then obviously commodity prices will do well because of the shortages. If the world economy does not get better, they're going to print a lot of money, and you need to own real assets when they print money. And yes, there are 40 elections this year, and yes, they're going to print more money.
Jim, gold was one of the best trades of 2011, gaining about almost 20%. Will that kind of performance be repeated this year as well? What is the kind of return that you're expecting from gold?
Well, I don't know, Aisha. I own gold, and I'm not selling my gold by any stretch of the imagination. Can it do 20% again? Well, of course, it can do anything, but that would be 12 years in a row that gold would be going up. And that's very unusual in any asset, as you well know. It would not surprise me if gold didn't spend this year continuing to consolidate. Maybe by the end of the year, it would start rising again and maybe even have another up year in 2012. But gold needs to continue to consolidate. I own it. I want it to consolidate. It will make it much, much better, and the ultimate bull market much longer and much higher.
Jim, all industrial metals saw major correction in the second half of 2011, but now we hear bullish commentary on copper as well as aluminum from Alcoa and Chinese buying in copper as well. What's the call on both of these for 2012?
I would suspect you're going to see base metals doing better because you have these elections and government spending and printing a lot of money. I'm not selling any of my metal. I'm not selling any of my commodities, period, and certainly not my base metals. I think they were probably among the worst performers in 2011. They're overdue for a nice rally.
Jim, last time when we interacted with you, which was beginning of the year, you were short India. Are you revisiting your call, or are you still short India?
I'm still short India, Coach. I mean, you people, you all should stop calling me up because I'm still short India. Yes, I love India. It's the most wonderful country in the world to visit as a tourist, but I'm still short India. You've got serious problems there. Your governments are always making mistakes. Much as I love the country, I'm short other emerging markets too, Coach. I'm not picking on India. I'm short many emerging markets.
We always love to have you back, Jim. So even if you're short India, we certainly will invite you back. But within the Indian market, what are you short on? Are you short on index, or are you short on some specific group of stocks?
No, I'm short the index. I'm short the index. I'm short the index in emerging markets everywhere. Brazil, Indonesia, most emerging markets.
So if you are bullish on commodities, why are you short on Brazil and Russia? Because these are two markets which get about 60% of their total GDP from commodities.
I think I understood your question. I could barely hear you, but Brazil is wonderful, and I'm very bullish on commodities, and the two are commodity countries. But Brazil is normally not a very well-managed country, and the new government has been making what I consider many mistakes. And, of course, the market there was very, very high. All emerging markets ran up a lot in 2010, 2009 and 10, and that's why I started shorting emerging markets, mainly on price, Nikunj, because most of them just went up too much.